Hello students and good day to you all. Welcome back to the Financial Academy weekly analysis. Today it is the 11th of December 2017, and right now we're going to have a very special session. But before we'll begin, I'd like you to spend several minutes to read our disclaimer, because really this information is suitable for our students that have been working on the material, know exactly what the terms mean, know exactly what are the money management and ideas behind our analysis. And if you're not familiar with all the information, that I do advise you to move forward and look at our website, look at the information that we're giving, so that you'll be able to elevate your knowledge and experience. So let's move on, and today we're going to do a specific analysis on a specific asset. We're going to go to the Sidekicks, my trading station as usual, and I'm going to maximize the trading station. And just generally talking about the regular assets that we've already analyzed. We're still on our way. You can see that from last week we had the downtrend movement. I said that we've got a very good entry point to rejoin the uptrend, and right now you can see that indeed the market is returning to the uptrend. We're in a specific channel over here, but our expectation is to see a continuance of an uptrend. But I want to leave all the dollar potential aside. At the end of the last session, I was talking about the euro in front of the Australian dollar. I told you that the Australian dollar is in a potential to lose additional strength than the US dollar. Then it possesses a better opportunity for you to invest when it comes down to expressing weakness in front of a euro, in front of a currency generally, or euro specifically. We've talked about that. So what I'm going to do right now, I'm going to move forward to the euro in front of the Australian dollar. I'd like to take one of the most common ideas in the market, and I'd like to explain that using the euro in front of the Australian dollar. Okay, so looking at the euro versus the Australian dollar, let's close all the unnecessary information from the background. Perfect. Okay, so what we've got over here, let's talk about the structure itself. What we've got over here is a major downtrend movement. I'm talking about movement that occurred since 2009, okay? And move forward to a low rate on the euro in front of the Australian dollar, reaching the lowest bottom at the 2012, as you can see over here. And since then, we've moved higher in a corrective pattern. Now, generally, what I'd like to show you over here is the idea of head and shoulders and the connection of head and shoulders to the Elliott Wave analysis. So let's first of all talk about the head and shoulders idea. Head and shoulders are saying a very, very specific idea, that when we've got a specific movement that dictates a specific proportion that fits the idea of a left shoulder, first bottom, the head structure, the next bottom, and the additional shoulder that fits the measurement of the first shoulder, then our expectation is to see a movement that will take us beyond the bottom line in such measurement that will allow the market to move significantly and will form a very nice profit potential. Now, it all comes down to measurements. I will talk about percentage in a second, but right now I'd like to focus on the idea of head and shoulders, and obviously talking about the Elliott Wave analysis on how it fits this idea. So what we've got in front of us is a structure that fits the idea of head and shoulders. We've got the left shoulder, we've got the head, we've got the right shoulder. If we will move forward and start to analyze the idea in terms of percentage, in terms of a pullback, then we will just place a retracement Fibonacci scale over here, and you can see that the market climbed toward the 72 level, which is a very, very important level. We can see a lot of divergence occurring on the 72% level. Now, usually when we're talking about head and shoulders, we're talking about between the 61.8 to the 50 level of retracement. Just that in terms of the structure, it fits more the idea of retracing the 72 till 70 8% in this specific structure, in this potential, because of the first shoulder. You can see that the first shoulder reached a very high level, and then we've received the pullback, and then we've received the head structure, and right now we're forming the right shoulder. So generally, when we're analyzing this structure in terms of the head and shoulders potential, we're talking about a downtrend movement that will lead us toward the 1.28 level. Okay, that is a very, very large movement that we're talking about over here. A very large, a very long-term investment. Talking about approximately 18%, as you can see over here. That's a very, very large movement that we're expecting to receive. And we can say that the expectation in terms of movement, in terms of time, is pretty equivalent to the first shoulder as well. So we can say that our expectation is to see this movement occurring during a year and a half. Approximately a year and a half of a downtrend movement in this specific structure. So we've got a very good entry point when it comes down to the risk and reward measurement levels. And in this case, obviously, we can take a very, very small investment, risking very low capital and seeing a very large profit potential. Obviously, it will take some time to see this movement forming on the chart, but let's go back and try to understand what we're seeing in front of us in terms of the Elliott Wave analysis. And that's the beautiful thing. This is why I'm investing so much time in this specific structure, because on one hand we've got a general idea of how head and shoulders is forming on the chart, but on the other we've got the Elliott Wave, which is analyzing the psychological aspect of traders. And when we see a connection between them, then we've got a very high probability to see this formation occurring on the chart. So what we can see in terms of the Elliott Wave is, again, a very long downtrend movement. We can see a corrective pattern climbing up, and we can see that the market is in a potential to form a downtrend movement. Now let's start to separate this structure to different waves. Okay, what we can see over here is that we've got 5 waves of an uptrend movement, and you'll see exactly why I'm placing these levels at this structure specifically. We've got another ABC pattern over here. Okay, so we can say that this entire structure, looking at the larger scale, is practically 5 waves. 1, 2, 3, 4, and 5. Let's mark that in a higher level and in red. Okay, so this is a 5 wave of an uptrend movement, meaning that we've got a completion of a specific structure over here that should fit the idea of a corrective pattern we've got, because we've received such a long-term impulse downtrend movement. So this uptrend movement has formed 5 wave movement, and our expectation is to see a corrective pattern that will form an ABC structure. And this is exactly the connection between head and shoulders and the Elliott Wave analysis. When we're analyzing a head and shoulders pattern, it should only occur when we're looking at the end of a 5 wave movement and the beginning of 3 waves, or the end of 3 waves and the beginning of 5 waves. Okay, because that will be the only way to connect between the formations, the structure, the measurements of head and shoulders definition. So in this case, we're practically looking at a very long-term corrective pattern. Our expectation, if we'll erase all this additional information, our expectation is to see a large ABC pattern. That will be the a zigzag of a B wave, and a C wave climbing up. So we're talking about a very long-term analysis. I'm talking about approximately 10 years of a downtrend and an uptrend movement that we're looking at right now, with the divergence potential at this specific level. Okay, so we've got a very clean structure, and that's the connection between the Elliott Wave analysis and the idea of head and shoulders. I just want to show you how it's so beautiful to see that the connection between structures. Okay, I can't explain how frustrating it is to see traders using the idea of head and shoulders without knowing where they're placing this information, with no logic. And once you see this connection between the Elliott Wave and the head and shoulders pattern, then you've got a better confirmation, a higher success rate, and a higher amount of confidence when it comes down to actually participating according to these trades. Now, to our traders, we've talked about the potential of taking a trade. We've talked about lower amounts at the beginning of the trade, and we've talked about how you're adding more and more trades at what levels as the market is moving toward your direction, so that you'll be able to cover your losses on one hand and to higher the profit potential along the way. Regarding the US dollar, it's still the same. We're expecting the dollar to lose strength in the market, and we've talked about the major currencies, the euro, the pound, and the Japanese yen. Regarding this asset, the euro in front of the Australian dollar, then as you can see, indeed, the Australian dollar lost a lot of strength in front of the euro as we were expecting to receive last week. But reaching this peak at this structure, our expectation is to see a divergence on the Australian dollar strength. And we're expecting the Australian dollar to start gaining strength in the market and forming this structure, as we've showed you based on this scale. I wish you all the best with your trades. Have a pleasant week, and bye-bye.